I gotta be muted, right? Hey, what's up, guys? Happy Friday! Yay! Hopefully, you guys are ready to rock and roll and spend some of that sweet cash that we earned on the last trade. Hopefully, you guys have a trade, played out to the upside, to the downside. Today in the morning, we should be on breaking even, and right now, we should still be into the trade and at least getting ready to get out of that trade. But before that, hopefully you guys can hear that, what I'm hearing. So that creepy sound behind me, nice. All right. Also, Jesse, what is up, my friend? I know it's a little bit late there, but thanks so much for jumping in here. Alexander, hey, vamos, the Queen Mod. Welcome, family. Great to be here. My man, username in the house. What's up, my friend? How's it going? I think you can come on stage and then we can start doing, the bullying up from here. That'll be a better perspective, right? Jay Violet, what's up, Jay? Love to see you here. Thank you so much for that shout out on that Discord. I'm watching it. Thank you. Really appreciate it. Let's get it. Who is in here? We have CryptoQuant Mindset. Hey, what is up, Queen? Happy weekend, yo. Happy weekend, Queen. What's up? Are you guys bullish on the weekly candle? I know. I haven't watched it. Let's take a look at it today. Who else we got? Oh, I cannot read that just now. He says, hey, everyone. Hey, what is up? What is, let me know how can I call you, my friend. I'm talking about you guys right here. That says, hey, everyone. So hopefully I can get your name there. Harp, what is up, my friend? Who else we got in here? Hey, Amy Leaves Crypto in the house. Shout out to Amy Leaves Crypto. Hey, welcome. Hopefully you're having a great. By the way, killer banger of a video. I should say, guys, if you are not watching and following Amy Leaves Crypto, you are missing out. So you got 10 seconds to go and follow her up. All right? 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right, let's get it, guys. Let's take a look at what we got in here. And let's also see what I'm pretty happy. I think with the limited tools that we've been learning, we can do so much at this point, right? I want to talk, before we go into the trading session, I want to talk about a little bit of the psychology of learning YouTube, right? This happened to me when I was trading. I do remember when I learned candlestick patterns, because yes, today we're going to be seeing the introduction to candlesticks in candlestick patterns, right? And all of a sudden, I kind of like forgot about trend lines. I then also kind of like forgot about patterns, right? I kind of like forgot about every freaking thing that I learned, and now candlesticks, they were my whole world, because that was a brand new, like a shiny tool that I was playing with, right? But the thing is, when you look in the past, everything seems to be much more easy, right? But when you are live trading, you understand that it's not as easy as it looks. Well, we're trying to make it easy. Remember, we go on confirmation, or at least in big areas of support or big areas of resistance. Trend intuition in the house. What's up, my friend? Great to have you here. I really appreciate it. Background motion overpowering your role. Thank you, my friend. Let me just change that. Is that better? Thank you. Let me hit a really lovely like right there. Is this better, or is it just still too loud? Let me know. Turn down the dubstep, bro. Yeah, absolutely doing it right now. So sorry, I was not aware that was too loud. So maybe I can even turn it down a little bit more. Let me see, maybe 28. Okay, perfect, better. All right, it is at 0.3 right now. So, all right, one part of the psychology thing here was like you learning a new tool, kind of like open your mind to a certain different perspective, right? But all of a sudden, I forgot everything and started just focusing on the new thing, and then trying to learn and apply a new just learned strategy. That usually messed me up, right? My win rate plummeted. Maybe one or two trades were very nice, and then I didn't know what was going on, right? And here's the thing, While trading, it's just like learning like skateboarding. Oh man, what a fall. But stories aside, you need to learn many things, right? Controlling the board, how do you break on the board, how fast can you step on the board, right? How far can you lean backwards or forwards, right? Without losing your balance, so on and so forth. So every piece of a trick that you learn, it becomes just a part of an overall story, right? Remember what we always talked about here, structure. That's what was the first thing that we look for. Support resistances, trend lines convert into patterns, and then patterns can get confirmation from candlestick patterns or candlesticks, all right? So other than that, let's dive into today's lesson, and let's get started with Kevin. All right, thanks so much for your patience. And I don't know what this is not showing up. It should absolutely be showing it right now. Oh, I see. All right, I got it. Sorry for that, guys. So let's get started here. And by the way, guys, let me know if how's the audio in this part. Is it overpowering my voice? Should I be lowering a little bit more? Let me know, guys. I'll be more than happy to adjust it for you. Oh, let's take a look at Kevin. By the way, I'm reading you guys right here on the side chat. So let me know about the music. Still experimenting. Too loud. All right, perfect. Let's move that. Is that better? Let me know about the music setup so I can adjust it. I'll be amazing for you guys. A bit loud, I think. All right, perfect. Let me turn it down a little more. You're dancing. Hey, Mark Dutch, what's up, brother? Let's put it to 1, I believe. 1.4. I think that'll be good. Hard to hear me. All right, let's put it all the way down 1. Thank you guys for taking the patience. I really appreciate it. All right, so guys, also I'm gonna keep talking a little bit more, and then if the music is too loud, please let me know so I can adjust it a little bit more. Maybe 0.08, maybe that will be it. All right, so let's zoom out into Kevin, right? We are on the 2 hours. We were looking for a set of 2 trend lines, basically creating a range, right? Then zooming out, remember we're looking for structure. What we saw here, it was either a symmetrical triangle or a bullish pennant, right? Then what happened here, it is that this represents area of volume. Not only that, a resistance, because we ended up breaking downwards, right? We made a box so we can measure from the bottom almost to the top in here and maybe try to catch this candle. Look at this. This is usually when indicators come into place, right? And that is because how do you know exactly where the top is? We usually measure the range, right? Usually that is a very banger area, right? But sometimes it overshoots, like in this case, right? That's also why we do our wiggle room on stop losses, right? To try to mitigate this overshoot, right? So we could even aim all the way up here, right? But this start getting a little bit too obnoxious, I would say, at least, right? Too unreal to actually trade it. But let's come in and see what happened today. So basically, we went into the shorting area. I stick to my entry point, all right? What happened? It is that it took me out, all right? So I'm in negative right here, negative X, right? What happened then? And this is why, man, this is so perfect because today was, or we're going to be talking about candlesticks, right? So yesterday we looked at this candle here, right? This is a very special candle. This is an inverted hammer, right? Or a shooting star. So sometimes when you see this, well, then this is a reversal. Either look at the top or look at the bottom, right? So let me give you guys an example. Look at that, big wicks on a candle and smaller body, right? Especially like this, right? Like this one here, they aim at a possible reversal, right? Why is that? Because we see volatility here and also we see absorption. What do I call this? Absorption zones. Or why do I call this absorption zones? It is because the price went there and just like a sponge, we were ready. We are talking about retail, right? We as retail, we're ready to buy that liquidity or sell that liquidity, right? And then push the price the other way around. So basically, just like a sponge, we absorbed the liquidity being placed at those areas, right? So basically, liquidity areas and candlesticks like that usually define a reversal pattern. Again, look at that big wicks, absorption zone, reversal, right? Big wick, absorption zone, reversal. Big-ish wick, absorption zone, reversal, right? You see, I think we start getting a point, especially when we are in a known either support or resistance zone, all right? So let's see then what happened here and explain it piece by piece. So we have the closure of this candle, and then I waited for one more candle, right? Just to see if this was pushing still upwards, because remember, at this point, I was not using, or I'm still not using an oscillator, right? An oscillator is usually key when trading because it is a directional indicator. Most of the oscillators are directional. Basically, they point at after the bulk of the movement, right? And based on that, we can predict whether if we are just rushing in, rushing out, we still have that mass to keep pushing through, or if we're just running out of fuel, right? We'll see that in the next episode. But at this point, look at that. I waited, and then after the next absorption, and then breaking back into my shorting zone, right? What I did, wait for the candle close. Wait for this candle closing here, and then I enter on the next shorting here. What I did with my stop loss, let me give you guys an example here. What I did, because I already have a predefined area of resistance. So let's just add 57.17. So stop loss. This is 57.50, 57.50, perfect. So I aimed, and let me zoom in here. I aimed at the previous high and then give myself a wiggle room. Am I still aiming at a 1 or above 1? Yes. Why? Because at this point, I'm expecting to break back into the channel, all right? And then what? And then continue my way all the way back down here, right? Something about channels and patterns. We talked about this before, but let me double down on this. When we have a range, all right, and we have the price of the asset going up and down, and we have a candle breaking above and the next one breaking back inside, this usually aims at a non-stopping median and then visiting the lower range, all right? The same thing goes the other way around. If we fake out downwards and then close back inside, this usually means that we're going to be hitting the top of the range. The same happens when we are into asymmetrical triangle, right? We start ranging, we fake out, right? We close back inside. That means we're going to be hitting the top or the opposite part of the pattern, right? That happens with most of the patterns. So knowing that piece of information, closing back inside here, well, then what we see, a chance to go coming back downwards here. So what I did, it was basically enter at the same point, waiting as I was coming back down here, and as I start closing this candle, because I'm very close to my median here, I took some profits, moved my stop to entry, took me out on profits, all right? Because when I move my stop to entry, I give myself a little wiggle room also in profits. Stop me out. Again, look at that beautiful candle, right? Just like this one. What should we have done? At the top, remember, knowing that the most probable chance is to visit the lower part of the channel, we should have entered a short, all right? I did took the short, and I will be closing it very, very closely as I started hitting the median. Median for me is going to be 50% out, moving my stop back to entry, and then aiming for the bottom of the range, all right? So in the first trade, I did close it absolutely. Why? Because I needed to compensate my first taking profits. Sorry, my first stopped out because I was on a loss, right? Remember, something special about understanding the trade or the trade psychology, it is that 90% of the traders are usually in a losing position, or they lose money on the market, right? What are 90% of the traders doing? They're pushing to earn more, right? How to win trades and how to multiply their money. There's nothing wrong with this, right? But the perspective of human psychology is what changes the reaction of us, right? So let me give you an example. If we start talking about maximizing profits, right, into winning against the market, right, into a bullish state of mind, we usually tend to take more risks, right? And the greater the risk, we tend to get some sloppy. We sacrifice security to take more risk that we can handle. And that's why it leads us to what? Hey, it's coming back up. I'm moving my stop farther down or farther up, right? I know I can make it. Why? I'm trying to make money, right? So you start doing things that you're not supposed to. Then let's just change the perspective overall. We're not changing the entry points. We're not changing the ratio of the trade. We're not changing the amount of the trade. We're just changing the perspective of the trend, right? What are we going to be changing it to? Instead of making money, conserving or protecting the money that I already got. That means that if I'm in profits, what am I going to be trying to do? Protecting. What's the first thing that you're going to be doing while protecting? Well, moving your stop to entry or even taking early profits. You are cashing out a little bit, right? Because you're protecting your capital, right? So just by changing the perspective of what you're doing, you start taking more responsible trades. Yes, maybe are they a little bit less profitable than if you will let it run? Of course, but what if it didn't run, right? How many times have you guys encountered yourself into a trade that is winning, right? And you're, yes, let's go. And then it just turns around you and then you're losing because you did not take early profits, neither push your stop to entry, right? So I would say that it's better to break even than lose money on the markets, right? Losing money on this kind of markets is just a normal part of the day, as long as you have small losses and bigger wins, right? At least constant wins, so you can start growing your account. So let me see if I'm missing anything here. Hey, Wayne C, just nipped in to say hi. Yay, what's up? Hey, Violet. Hey, Jesse, Alexander, OG. Oh, absolutely, I love it. Crypto Princess, what's up? Hello, and the bed less. Have a great weekend. Have a great weekend too, my friend. What else we got? Am I missing anything here? You guys, let me know. All right, so let's move forward right now. Let me just save this. So let me click here. Let's lock this, and let's also lock this one so we don't lose it. Let's clear this up, and let's follow up on this trade. All right. So now let's go one of my favorite academies when explaining for simplicity, right? And we're gonna be going to, well, Binance Academy. Why? They oversimplify stuff, and at this point, that's what we're looking for, right? We're not looking at this point to dive like so in depth on concepts that we just get lost. No, we just want to know barely enough to make money, right? To make things simple. Then, as we progress, we're gonna be adding more maybe cheats, tricks, tips, so on and so forth, right? At this point, let's get started with knowing what candlesticks are, what they show, and how they're being showed. All right, so let's copy this image here. Let's paste it. Right, let's paste it here, and let's make it as big as we can. By the way, a little bit of a heads up here. It is that we are building up. Well, guys, what are we building up in here? What did we learn yesterday, right? Perfect. Hey, the Reap chat is in the house. What is up? Welcome. Love it. Love it. Username, I get that same impression. Probably 9% of the viewers are like that. Like what? I'm missing out, man. Can you tell us your trading rules? Sure, absolutely. I can, in fact, you know what? Thank you very much for the donation. And I'm gonna give you guys a little gift in here. Also, Alexandra, thank you so much for your donation. Let me bring up something just for you guys, right? By the way, this is gonna be exclusive for this chat. And then I'm gonna be giving it on the Piper Academy Discord. So if you're not part of this, of the Discord, go ahead and subscribe to the Discord, because I'm going to be giving, as we build stuff, we're going to be giving it there. Let's first get primed step by step. That's how the file names, the name of the file. Oh, I need to, of course, log in. And I'm going to be giving you my rules here. Get primed step by step. All right, perfect. Let me just get the actual link in here. Let's just share it, copy link, perfect. And then let me paste it here for you guys. Here we go. These are my trading rules, guys, right? You can go ahead and copy this document to your drive, right? This is a work of years of trading, and this is also part of the community participating in trading it. Username, final warning. Oh man. Oh, let me intervene for username, man. That's my buddy. That's my buddy. All right. Let's go ahead and let me explain that for my trading rules. There's a couple of them, and we need to dive farther within the theory to understand it a little bit more. But here it is. Why not? Let's just share it. All right. So let me just get rid of this. Perfect. How to get started, right? First, load your indicators. So we are not using indicators so far. So that's why I'm telling you that we need a little bit more in-depth or go or progress farther on the learning before this start making sense, right? Then settle down your working time frame and trading time frame and as an asset. So basically, take a look at where you're the most profitable, right? I do the 15 minutes. I love the 15 minutes. I'm recently diving into the 1 minute. I also like it. There's a lot of emotions there. I end up screaming to my to my screen actually. So man, if not ask Alex on crypto, he's been part of it. And man, he does so much FOMO. He does a FOMO to me. So whatever. Nonetheless, remember, you need to take a look at where you're the most profitable. For me, that's the 4 hours, right? Because at this point, we want to make money, right? We're not here to gamble. We're here to take a look at the numbers and make money based on the numbers, right? So for me, I am the most profitable the 4 hours. How can you tell that? Well, you can tell that because your brain, in this case my eyes and my brain, perceive better and faster the trends and the tops and bottom of those trends in trend breakouts, right? So basically, if I go to Bitcoin, because that's my favorite asset, right? And then I do the 4 hours, what is it? I can absolutely tell you, right? The structure, like easy peasy. My brain kind of like finds it so quickly. Look at that. Inverse, head and shoulders, neckline, breakout, right? I can see trend line here, breakout here. I can see another trend line. Oh, look at that. I see a V-shaped recovery, a little range. That gives me 70% chance of ranging. And guess what? We are ranging, right? So far, I can predict or I can see things much easier on the 4 hours, right? That makes me a little bit more confident into jumping in and out of those patterns, right? Another thing that happens on the 4 hour, and this is part of my rules, it is that it gives me enough time to meditate about the entering and exit, right? This is not something that I planned for. This is something that came naturally while trading the 4 hours. What happened when I started trading, I had a day job, right? And I was not living out of trading. I start just practicing trading, which means that I need to pay attention to what was putting bread on my table, which was architecture. So I needed to concentrate on architecture to make money, to then be able to get some money and put into trading. All right. So the 4 hours for me was a great time frame because that gave me 4 hours in which I could be distracted or advancing or moving forward with my business, then come back, execute a trade, go out, do not worry about what's going to happen because I still have 4 hour pair candle, right? And then see my results being performed, right? And then maybe if I just get scared, maybe within 2 candles on retest or something like that, I can even call out my trade, right? In 0 loss or closely to 0 loss, all right? So that has to do random points. So OC Ducks pin on the top of this. Perfect. Thank you for that. I really appreciate it. So let's go and take a look at what is the next thing. Suggest 4 hours daily. Usually when you have a day job and you don't want to be so stressed, I suggest going between the 4 hours and daily, even 1 hour, depending on what you feel, what you see, right? Before entering a trade. So then number 3, confirm your trend mode, right? Why? This has to do with trendy. This has to do with market dynamics trend mode, which is market oracle, not dynamics. Trend mode, which is trendy, and this number. Why? Because this, as its name suggests, trendy, right? It is telling you the trend. So if we're not using indicators at this point, this rule will change to confirm what is your trend, right? Are you bullish or are you bearish? Then layer out the indicators in multiple instances. Again, we are not yet on indicators, but when we are using indicators, we need to make sure that we can see the price action, right? We need to make sure that we can see the candles between the indicators, and the indicators are not getting in the way. If we are not using indicators, maybe we can change this to clean up your charts. So basically just get rid of unnecessary noise, right, that you may have, to be able to have a clean perspective of what's happening. All right, so you can now start drawing your trend lines. Look at that breakout. Maybe a retest. Look at where do we have the next alert. And maybe if we're lucky enough, we can be taking a trade right here. And off we go, right? Then 6, DNA or fingerprint of the assets. So what is a DNA or fingerprint? Well, certain coins at this point react differently to the markets. Everything overall follows Bitcoin because Bitcoin, it is the greatest or is the biggest market cap so far on altcoins, and also it is the most stable, if we can call it like that, all of the altcoins, right? Basically the most important. Let me let me give you a quick explanation. Me, as an investor, I'm going to be trying to invest more on a less risky asset that give me constant result. If we are in cryptocurrency, that safety or saved word comes with quotations, all right? Ask any other trader out there. All right, now that we know that, well then, I'm gonna be putting maybe, I don't know, 50% of my investment portfolio into Bitcoin, and then 30% in high market cap altcoins, and then a 20% into degen coins, right? Into maybe, I don't know, gaming coins or anything that is much more volatile. So what happens if Bitcoin plummets? Well, then the first thing that's going to liquidate me, or at least take me out, will be what? Altcoins. That's why they're more volatile, because they have less volume cap. And then what I'm going to maybe try to do is buy cheaper Bitcoin, right, with the money that I have left. Why? Because at the end of it all, Bitcoin is the guy to go to, right? So it is the asset. So I see the correlation. I mean, I'm missing out on the chat, man. All right, I'm not following. I think I'm gonna be sitting and rereading everything here. All right, so what's up next here? DNA. So basically, you'll see that, for example, Bitcoin love to do Wyckoff, right? Well, let me show you. For example, right here. Coming down, range, V-shape recovery, range, right? Coming down, we don't have a range, V-shape recovery, high, not higher than that. The order block that should be right here, range, ended up with a double bottom, right? What's another Wyckoff? Oh, here it is. Coming down, range, V-shape recovery, higher, not higher than the previous range, 70% chances of ranging, re-ranged, right? What else do we have? Oh, this one also, Bitcoin love to do this. Going up, have this little hump, make a bullish pennant, break out, create now the actual pennant, and then break through, right? Let me show it to you once again in a smaller pattern. Look at that, makes the small triangle, the small pennant, right? The hump, then makes the bigger pennant, breaks out, and boom, breaks up, right? And it repeats over and over, and you can start looking for those patterns, right? Let's see where else. Oh, here it is again. Look at that. Going up, little hump, creates the pennant, bigger pennant, right? And then boom, breaks up, right? So you see, this is looking at the DNA of the asset, right? The fingerprint. What is it like that maybe not other coins do the same, right? So for example, XRP likes to be flat until nothing happens, and then out of nowhere just blows. So maybe based on that DNA, when it's flat, we try to buy low, and then we just hold it, right, for that pop. And then what we do, we apply a trailing stop, right? So that will give you a base strategy on how to trade this, right? And when you are looking, you will know what you're looking for, right? Double bottoms, this pattern, Wyckoff on the asset that you are the most profitable. That is the DNA. Then before entering a trade, find confluence, right? Remember, this is the gathering of indicators or signals on your screen before entering a trade. Forecast and compare your analysis. Remember what we do here, right? Let me clear this up. When we create, and let's go to Kava. When we do an analysis, we just don't leave it. Where is it? We are forecasting our channel, right? We are forecasting our resistance. You see how I'm forecasting stuff? So when the price does whatever, maybe when it goes back up in here, well, because I already have forecast my analysis, I know there is a resistance there waiting for me, right? On a confluence zone where both the channel and the rising channel, the trend channel, and the resistance box are converging, right? FETH, there you go. FETH, man. Love it, Uncle Jess. Shout out to you. Hey, Alex out Crypto in the house. Let's see. What about it? FETH, man. FETH. But you know what? Let's do it. Guess what, Alex? Oh, crypto. I did a thing, man. I did a half of a thing there, man. I was waiting for Monday to tell you. But you are the ETH king, bro. I teach with OC at the what LA? You are the legend, my friend. Thank you so much. I really appreciate it, brother. So, dude, I made a half of a thing here. We'll see. Maybe I on FETH, but I doubt it, man. At this point, my luck with it is like, oh, dude, we're gonna be going back out, getting me out, stop me out, then create a thing, and then a inverted head and shoulders, and then do the freaking move, man. But I don't know. I might even go to you. I will be going to your. I give you the trade today. Let's fucking go. Yes. Yeah, you called out this area here. Absolutely loved it. Very nice. So let's take a look at then. Let's go rush through this, right? Risk management, guys. This is very, very, very important. I know I have skipped a little bit, right? But risk management, number 10. Know exactly your stop loss, because you cannot control how much you're going to win, right? But you absolutely can control how much you're going to be losing, right? So it's not about losing it. It's about conserving the value, right? But still, what is under your control, let's control it, right? When to enter a trade. This is getting important. Go over step 7 to 10. Find confluence, forecast and compare your analysis. Have always a plan B. What is a plan B? Let's go to Kava. Remember that we projected both a short and a long. Basically, we said short, long, short, right? So there's two trades there. That is my plan B. Or even my plan B, it could be, instead of hedging, could be my stop loss or my re-entry zone, right? Whatever seems to be the best case in order to conserve what? Your value, all right? The value of your wallet, all right? Risk management, perfect. And then always compensate for volatility. So we already have gone through all of those again. When entering a trade, at a retest, if possible, remember it's not about the breakout, it's about the retest. At least use 3 indicators, or at least 3 confirmation points of entry. Flip of the ribbon is one of my favorites. At support, right? A long at resistance, or sorry, for a long, or at resistance for a short. Remember, crazy support for longs, crazy resistance for shorts, right? We're gonna leave it till point 12. We're gonna be picking it up back at Monday on 13, 14, 15, 15, and 16. But so far, thank you guys so much for your donations. That's why I want to give you this setup that I have built up here and explain a little bit more. We're gonna be working on here throughout the classes, right? So let's prepare for the weekend. We need to understand that we have some volatility. We were talking about Bitcoin today and the possibilities of failing through this area, and seems like we are. In fact, with Alex O Crypto, we were talking about this movement right here, and what a beautiful, in fact, he called it, he said, oh, see, wouldn't a double top bottom would be it? And I was, yeah, man, I also think so. Beautiful double bottom here, right, that we talked about. Remember the W pattern. And then what do we have here? One of our candlesticks going up. All right, so we still have 15 minutes. Let's wrap it up with the topic of today, which is in fact candlesticks. So let me just get it here. Man, I lost it. Maybe in 4 hours. Yes. All right. So candlesticks, guys, we have the basics in here. This is a candlestick body, right? Let me just go to somewhere that we can. Perfect. See a little bit better here. All right. What happens? We have a wick or a shadow, right? Both in here. And this is where the price went to. So basically the body went all the way up here, but then it was not able to hold it and then retraced, right? That is usually the signal of where the volatility is going, or why is the volatility happening. Why? Because there's people willing to buy here or sell here, right? And then there's the opposite also making that volatility. So, hey, you selling, I'm buying, right? You're selling, hey, I'm buying. So we cannot hold that position because there's always somebody there that is counteracting that position, that area, right? When we start seeing that kind of wicking action constantly, that's what we call for an absorption zone, right? Or a big candle, right? A big candle wick. So as you can see here, okay, shadow or wick, and then we have the body, right? The body shows you when we are on a green candle, the open position at the bottom and the closing position at the top. So basically, where the price opens, that's where we create kind of like a baseline for the body. If then the price goes lower, creates a shadow, right? Then the price goes higher, right? Creates the body, and then when it retraces, creates a shadow, and then it closes here. When the candle closes above its opening price, so we gain, right? We gain to the upside, we gain space to the upside. That is a bullish candle. All right. Then the opposite is truth for bearish candles. Basically, you open and then maybe can move up, down, regardless. But when it closes in a loss, right, or to the negative or below, basically, it is a bearish candle. So right away, the candlesticks can give you 4 pieces of information. Opening point, right? Closing point, up to point, and down to point, right? So this is what is important, because you can have a ton of information out of a one single itty bitty drawing there, right? So once we have once we understand the candlesticks and what information they give you, certain patterns of candlesticks give you possible trend creation. We're still live? Okay, I think we're still live. Sorry for that hiccup. All right. Hey, Piper, what's up, my friend? Hey, come chill with us. Hopefully you have a better day today. All right, so candle patterns. One of the most important candle patterns, right? Remember, guys, this is something that despite could feel like magic when you start learning it, right? Especially this kind. Look at that, right? The doji at the top, right? Or the hammer, right, at the bottom with the liquidity of absorption zone, right? Those are one of the most important. But here we go. Hammer, right? Hanging man, which is the inverted hammer. One is bullish because comes back down. We have a hammer, absorption zone, and then we push up, right? Where the bearish will be the hanging man. Going up, having a hanging man, retracing, right? Shooting star with a big wick at the top, right? Inverted hammer, yes, big wick at the top, but at the bottom. One of my favorite ones, it is the doji candles at the top or at the bottom. This is what I call a absorption zone, right? Bullish snipping top and bearish snipping top. Also looking for reversals. So this is also other kind of patterns. One of my favorites are 3 white soldiers like this. So 3 big constant bullish patterns, and then 3 black crows. Just so you know, in the past, the charts were black and white, not green and red. All right. Therefore, the 3 black crows basically was 3 black candles here. So that's what the black comes from, just in case you didn't know. And bearish engulfing and bullish engulfing. Those are one of my favorites also. Let me see if I can find them. engulfing. There we go. Bullish engulfing. Basically a big candle, which its body, right? It is at least 1.5 times the previous size of the candle. Basically a bigger candle, marking a definitive movement, right? Bearish engulfing. Here is bearish engulfing. Same, a big old candle marking its movement. Usually we're gonna be seeing those engulfings at the breakthrough of support and resistances, right? Remember what I told you guys before. Big body candles going through support usually indicates a confirmation movement, right? Where is your support? Look at that, tops with absorption, stops with absorptions. Look at that hammer, right? Look at that doji. We can draw a support resistance here. Big body candle, engulfing candle, right? Confirming the breakthrough. It's not about your breakout, it's about your retest, right? Bullish engulfing, your entry, and off we go, right? So as you can see here, I'm using a set of rules or set of patterns here, one after another, and not only rely on one single structure here, right? So what I want to do is use the overall knowledge that I have and start predicting the patterns or the price movement. Again, speculation is a big part of trading, right? But also confirmation, and know what you're looking for. That's why we always in this class start by zooming out. Why? Because the first thing that we need to understand whether if we're bullish by trend or bearish by trend. What is the structure? Then what we're looking for, breakout retest, right? What can we look for confirmation? Candlestick patterns, right? So that is going to be it for today's class. Guys, thank you so much for joining. Thank you guys for your donations. That's why I'm going to be leaving the link here on the side chat. Alexander G has already pinned it all the way up there. Make sure you copy this to your drive and use it before entering and taking trades. We're going to keep learning a little bit more and diving deeper within candlesticks in the future. But so far, I think we have enough of information to start learning. By the way, if you want to learn a little bit more, feel free to visit Academy of Binance. I think they do a great job by making things very simple, right? In the future, when we dive deeper within these topics, we're going to be looking at other resources, a little bit more professional and a little bit more detailed to grasp a little more information on where to pinpoint entries and exits. But so far, guys, thank you so much for joining. I really enjoy being around you guys. Also love the hyping here in the chat. And as always, see you guys tomorrow.